What's up, folks? How are things? It's Erica here, and it's nice to see you again on my YouTube channel. Today, as usual, I will be making money on binary options and teach you this craft, so please do watch this video up to the end. In the description below this video, you will find a link to my Telegram channel, where you can ask me any questions you have. Besides, you will find a link to my private Telegram channel, where I share my daily trading signals. Send me a direct message in my private Telegram channel and get my personal link for PocketOption registration, which will give you a 50% bonus in your deposit. Now, let's go to PocketOption and let's get going. In front of us, there is a price chart of the British pound Australian dollar currency pair, and we will work with it. And I open a Downtrade for 1 minute with $300 in. Despite the fact that I will use 3 technical indicators today, none of them helped in opening this trade. And I'll tell you why. The price is in the area of the average line of the Downtrade indicator, while there is no obvious trend. The only point I paid attention to was the price being in the lower half of the indicator, which indicates a weak downtrend. And the Arun, its lines are below the level of 50, which rather indicates a period of consolidation of the price, and we just saw it on the chart. And finally, the Williams percent range indicator generally showed a possible price increase, but I made my choice by watching the price movement. And I was not mistaken, I received $273 as a profit. Going on. As you can see, technical indicators cannot always guarantee the right signal. Therefore, I have repeatedly said, and I repeat it again, it is necessary to closely monitor the price chart itself, and if necessary, double-check your predictions with the help of signals from indicators. But this is how trading is conducted, as they say, in manual mode. Have you ever thought how it works if trading robots are making decisions? Are you still thinking? I'm going to open another Downtrade for 1 minute with $300 in, and let's talk about what these trading robots are about and whether they can be used when trading binary options. And I made the decision to open a trade by studying the price chart again, and at the same time I found support for my forecast from both the Downtrade indicator and the Williams percent range. And so, surely each of you has heard more than once about automatic trading on exchanges using trading robots. And today we will talk about programs that were invented to help make money on exchanges, which they actually do. We will talk about trading robots, about how they appeared in the world of traders. But now, let's follow the end of the trade. The price has dropped well, and it brings me another $273, a good result. And so, an automatic trading system, or PBX, or a trading robot is a program containing a set of rules for opening, maintaining, and closing trades when trading on the stock exchange, designed for partial or full automation of traders. Simply put, this is a program code in which the algorithm of actions, the trader's trading strategy, is written and transmitted to the trading terminal. But now let's go back to our chart again. The price broke through the lower limit of the downtrend, so I opened a down trade for 1 minute with $300 in. Let me explain again. The indicators gave contradictory signals, but there was a strong signal from the downtrend about a possible price decline, since its lower limit was shifted down. In addition, the Arun also showed a possible decline in quotes, which I saw from the red line, which was around the level of 100, with the red line being responsible for the downtrend. But the blue one was below the level of 30, and by the way, it is also a strong signal about a possible price decline, while the Arun had standard settings for 25 periods, and its signal acquired importance. Only Williams talked about possible growth, and I didn't take it into account. And as we saw, I was a little hasty, but nevertheless I was able to get another $273. A human is not a robot, and a human may be wrong. Is the robot wrong? I'll talk about it later. And so it turns out a trading robot is a combination of an algorithm program, a trading terminal, and a personal computer on which the program is installed. But everyone calls only one program a trading robot, an algorithm. As you know, the exchange market has been developing and changing for many years, yes, for years, centuries. With the appearance of the internet, trading robots have entered the lives of many traders, which help to save such a resource as time, shifting your responsibilities to a trading robot, so you do not need to sit near the monitor all the time and monitor the market movement by choosing the right moment to enter and exit a trade. But when did this miracle of progress appear? The first prototypes of modern trading robots appeared in the late 60s and early 70s of the 20th century. And I, after waiting for the same type of signals from the indicators, opened another downtrade for 1 minute with $300 in. I didn't rush it now. I think you noticed it for yourselves. The Williams line was moving down into the oversold zone. Then the red arrow line approached the level of 100, and the blue one, as before, below the level of 30. And the price is trying to reach the lower limit of the downtrend over and over again. And this told me about a possible price decline. This trade is going on, and that will continue. So, the first robots were based on long-term trend tracking strategies. The signal shows fluctuations in the price, a sharp rise or fall in the market. These were semi-automatic systems that could not trade fully without human participation, so they gave the trader a signal about changes in the market, and the trader himself decided what to do in this situation. And my trade ended with a profit of $273. Large financial institutions were the first to use Pseudo robots. Thanks to the introduction of new technologies, trend tracking strategies, they were making a good profit. The so-called robot builders were constantly working on improving the system, and a few decades later, new robots appeared on the stock exchange based on new algorithms that tracked the oversold market by various indicators or revealed deviations of the traded asset from the average value. I, again, despite the difference in signals, entered a downtrade for 1 minute with $300 in. This decision was made based on signals from the Arun. It had strong signals about a possible decline, but the Williams line, although it grew along with the price, still slightly deviated from the vertical movement, which could not speak of a strong signal for price growth. Watching the trade, I will continue the story. After the second generation of trading robots, of course, the third generation appeared, which were already based not on the trend but on patterns. They revealed which patterns were present in the market and gave signals when the pattern changed, not the trend. Then there were programs for connecting a computer to the exchange terminal, followed by programs for quick entry of trades. But the trader still had the main role. It was he who made decisions on trades. As I am today, by the way, I received $273. Here, on the basis of such simple programs, trading robots, the trader presence was no longer needed. They independently concluded and closed trades in accordance with the given algorithm. I'm opening a downtrade for 1 minute with $300 in, because I see the consistency of indicator signals again. Today, all the signals are clearly visible. The lower downtrend border is shifted. The red Arun line prevails over the blue one. The Williams line is moving down. What about the robots? In 1998, the US Securities Commission approved trading using trading robots, which led to global automation of trading. New improved technologies appeared. Algorithms were more complicated. At the very beginning of the 2000s, more than 10% of operations were performed using trading robots, while the time to execute a trade took 1 to 2 seconds. And at the end of the 2000th, the number of trades reached 60%, and the execution time was reduced to fractions of milliseconds. And my trade ends with a profit of $273. At this point, we can end the trading session and find out its results. Within less than 10 minutes, we did not only make $1,638 from 6 successful trades, we also scratched the surface of a very interesting topic of trading robots. As you know now, they appeared a very long time ago, and from the most primitive tools, they grew into super fast and independent ones. Yet, I haven't given you the answer to the question whether robots are wrong. I will cover this in my next videos, and at the moment I wish you a success in independent trading. And then again, I keep saying that it is essential that you carefully assess the current market situation before entering a trade. By and large, I recommend you to use the indicators whose signals you can read, for this helps reduce the risk and make a profit in the long term. I would like to encourage you to keep trading binary options because, as we can see, the analysis techniques are super simple here. And before we say goodbye, in the description below this video, you will find a link to my Telegram channel, where you can ask me any questions you have. You will also find a link to my private Telegram channel there, where I share my daily trading signals. And it gets better. If you direct message me on my private Telegram channel, you will receive a personal link to the PocketOption registration, which will give you a whopping 50% bonus to your deposit for free. Now, dear friends, this is a pretty nice offer, and I do hope you found this video helpful. Thank you for being with me all this time. I hope you enjoyed the video. And if you did, please like it, subscribe to my channel, and click the notification button so you don't miss a thing. That's about all for today. Good luck in the market. Take care, folks, and see you soon in the next video.